So what we are going to do now is shift to the second part, which is a session specifically to deal with a discussion on challenges and lessons learned from the COVID-19 pandemic. I apologize if we didn't manage to answer all the questions today, but we will aim to try and put those questions and answers into a forthcoming newsletter where relevant. So with that, thank you very much for those very good questions in the first part, and let's move on to the second part. And I hand over to you, Vicky, for some opening remarks to give context on this second session. Thank you.
Thanks very much, Jonathan. So it's a little bit commonplace to say, but nevertheless true that the pandemic has presented many challenges for the IAIS and its members, both professionally and personally. And the personal element is quite important. I mean, we all would have seen in our organizations how the well-being of the people that we work with can be affected by such a terrible event. That said, thanks to the cooperation and collaboration we have seen across our membership, we have come out of this experience stronger. And at the same time, we have managed to continue our work to deliver on our agenda set out in the IAIS roadmap, and the previous sessions covered quite a bit on this. It is also clear that we have learned some valuable early lessons from the crisis, including the importance of the reforms agreed in 2019. These reforms provided insurance supervisors with a common language and access to global data that was essential for assessing and addressing the risks from the pandemic. I mean, in the absence of these relationships of trust and of the infrastructure that we had built to share data amongst ourselves, and the common language we've developed with a supervisor material, I really think we would have been in much poorer shape. Additionally, the practical experiences over the last 18 months will define the new normal once the pandemic recedes. Sadly, it is unlikely that the current pandemic will be our last. Therefore, it is important for supervisors and insurers to ensure that they're prepared for future such events, or indeed more generally for other long-tail risks with global impact, such as global cyber attack. This is why, as a community of supervisors, we need to think about how best to future-proof insurance supervision and adapt to this new normal. We will start the discussion in this session with an update from Nicholas Colpert, who is a senior policy advisor in the IAIS Secretariat, on the work of the global monitoring exercise and what that shows us. We'll then move on to Faizan Abadat, another senior policy advisor in the IAIS Secretariat, who will update on the recent publication by the IAIS and the Financial Stability Institute on redefining insurance supervision for this new normal. As a reminder, we are keen to hear from you during this session, so please use the Q&A function located at the top right-hand side of your screen to raise your questions. With that, welcome Nicola, welcome Fazana, and I'll hand over to Nicola first.
Yes, thank you, Vicky, and hello everyone. So the Global Monitoring Exercise, or GME, is the IAIS's risk assessment framework to monitor key financial stability risks and the potential buildup of systemic risk in the global insurance sector. It builds on data collected from more than 50 of the largest international insurance groups and supervisors across the globe, covering over 90% of global written premiums. The Gme ensures that the international coordination of supervisory responses are grounded in evidence. Importantly, the Gme allows the IAIS to provide a financial stability perspective of the global insurance sector into the international policy debate through our reports to the FSB, which coordinates inputs across all financial sectors and reports to the G20. For the July G20 meeting, the FSB will report on lessons learned from COVID-19, to which the IAIS has provided the insurance sector perspective on the financial stability of the insurance sector. The IAIS will also report on the key outcomes of the GME to its other main stakeholders, which are the insurers participating to the GME through workshops and insurer reports, and to the public through the GMAR, or Global Insurance Market Report. As said by Vicky, last year we saw the real benefits of the GME as we were quickly able to adapt the framework to perform a targeted assessment of the impact of COVID-19 on the global insurance sector. And this year, for the first time, we will complete the regular GME. Based on the inputs and the data collected from insurers and members, earlier this week, the IAIS Executive Committee discussed the focus areas of the collective discussion on the outcome of the GME, which will take place in September. The GME will also benefit from inputs from CROs of insurance groups in a CRO roundtable, which will take place tomorrow, and where we will focus on key topics like interest rate risk, cyber risk, climate risk, and credit risk. The regular GME will not only support a collective discussion among our IAIS members of risks and trends and the potential buildup of systemic risk in the global insurance sector, but it will also serve as a key input to our strategic planning for the 2022-23 strategic planning as outlined in our roadmap. I will now briefly present the impact of COVID-19 on the global insurance sector, of which preliminary results were reported in our 2020 GMAR report, COVID-19 edition. The data for 2020 shows that in the face of significant market movements and disrupted economic activity, insurers remained operationally and financially resilient. This, of course, also reflects the unprecedented fiscal and monetary policy support measures taken in response to COVID-19. The IMF currently estimates more than $26 trillion of fiscal and monetary support was provided to stabilize markets and mitigate credit risk. So what are the key conclusions we can reach from looking at the 2020 data? Firstly, on aggregate, insurers' solvency ratios remained resilient and improved at year-end 2020 compared to mid-year 2020, however remaining below the year-end 2019 baseline. Insurers' profitability positions continued to be under pressure over the second half of 2020, recovering slightly, and liquidity positions remained overall stable. Unsurprisingly, the impacts of the pandemic on non-life and life insurance business varied, where for non-life insurance, the lower economic activity increased underwriting profits in some lines of business, such as motor insurance, offsetting then losses in other lines of business, which were negatively affected, such as event cancellation, travel, business interruption, and credit insurance. The life insurance sector was mainly impacted by the decreasing interest rates in most regions, resulting into declining profits alongside heightened reinvestment risk. And several life insurers note that due to the low interest rate environment, business transformation is in progress, together with the life insurance repricing. Over 2020, both insurers and supervisors have taken measures in response to the pandemic, such as reducing shareholder dividends and share buybacks, increasing solvency and liquidity monitoring, further issuance of debt, and taking measures to support solvency and liquidity across different subsidiaries. Insurers also increased their focus towards digitalization, for instance, to support insurance distribution in a remote environment. Looking ahead, overall, insurers expect stability in their solvency and liquidity positions, but there is a high degree of uncertainty, as the outlook depends on future paths of financial markets and interest rates, which in turn depends on further government support measures and developments in the COVID-19 pandemic. In terms of insurance sector vulnerabilities, 2 points of attention which came forward in the COVID-19 targeted assessment are, firstly, the increased credit risk of investments with high corporate debt valuations and extended financial market valuations, And secondly, the impact of persistently low interest rates, which is likely to further impact the life insurance industry going forward. So I will now hand over to Farzana, who will speak about redefining insurance supervision for the new normal. Farzana, the floor is yours.
Thank you, Nicola. Hello, everyone, and thank you so much. I'm so pleased for the opportunity to share with you some interesting insights from the recent paper that we published, examining challenges and opportunities faced by insurance supervisors as they adapt to the world of the new normal, particularly drawing on experiences from our own members during COVID-19. As was mentioned a few times earlier, this was a joint effort between the IAIS Secretariat and our colleagues at the Financial Stability Institute. And I just want to take this time to say thank you to the FSI for that collaboration. And we do hope that this is the first of many such collaborations in the future. The paper itself explores measures that were taken by insurance supervisors to ensure effective oversight of the sector, especially during prolonged remote working conditions during the pandemic. It also highlights some key considerations to help supervisors in their ongoing efforts to adjust to digitalization trends that we saw were accelerated by the pandemic, but also to ensure an increased level of preparedness for supervisors for similar large-scale disruptions in the future. Similar to the case with insurers, we found that supervisors themselves had to adapt very quickly to work from home and other social distancing restrictions quite early on in the crisis. And we know that many of these challenges and adjustments are definitely set to endure beyond the current pandemic and will shape what will become the new normal of insurance supervision in the longer term. At the outset of COVID-19, we found that most supervisors had to immediately reevaluate their priorities for the year. There were two objectives for this. The first one was to alleviate operational pressures on the sector, but also to look inwardly and refocus their own supervisory efforts onto those risks and issues that required greater vigilance as a result of the crisis. With mandatory shelter-in-place restrictions implemented to varying degrees across most of the jurisdictions that we spoke to, the supervisory processes that were most significantly impacted were obviously on-site inspections, but also other traditionally physical or paper-based activities. This forced shift to remote supervision changed the rhythm of supervision across most of the jurisdictions. Most supervisors that we spoke to suspended their regular cycle-based supervisory review programs and focused instead on more frequent theme-based monitoring of risks that were directly related to the pandemic, and also gave them the opportunity for more ad hoc and granular data requests for ongoing monitoring purposes. What was really interesting for us was that most of the supervisors that we spoke to have viewed this shift to remote supervision as yielding considerable efficiency gains and actually enabling more nimble and frequent engagements with insurers. We found consistently across the board that the crisis has been seen by several supervisors as an opportunity to reevaluate the efficiency and the effectiveness of their traditional supervisory approaches and identify improvements for the future. What is clear is that with virtual platforms currently in place across most of the supervisory authorities that we spoke to, it appears possible to retain most remote supervision processes in the longer term. However, we must acknowledge that instead of completely supplanting physical or on-site supervisory activities, in the new normal, supervisors may instead have to adopt a more nimble hybrid approach to supervision. The efficiency and agility gains that we saw during COVID-19 will need to be balanced with the ability of supervisors to retain critical non-tangible insights, particularly around behavioral and cultural and competency aspects of insurers, which are more optimally obtained through physical interaction with insurers. All of the supervisors that we spoke to shared the view that thoughtful and strategic investments in technology will be crucial to enable effective supervision in the new normal. The crisis has forced supervisors to accelerate many of their own digitalization efforts that they had been considering even prior to COVID. But in this regard, they will now need to apply a more holistic approach to technology in the future. What this means is, besides just the infrastructure requirements, they'll also have to invest in digital upskilling and strengthening of the quality and the security of the data that they need for improved supervisory analysis. Supervisors also recognize the need to invest more in developing their own internal skills and resourcing, particularly to be able to monitor new and heightened risks that we saw were catalyzed by the crisis. And this is particularly related to increased exposure to cyber and policyholder protection risks because of the increasing demand by customers for digitalized engagement and product distribution platforms. What we know is that a lot of these risks are also potentially globalized in nature, and we know this presents opportunities for international bodies such as the IAIS to establish guidelines or standards for these new normal risks that are being accelerated by the extremely rapid pace of digital transformation, which we know are set to continue well into the future. And I think on that note, I just want to say we look forward as an association to continued engagement with you on these important issues as we define our key priority areas in the upcoming years. So thank you so much for your time and your attention today. And I'll hand back over to Vicky or Jonathan. Thank you so much.
Excellent. Thank you very much, Nicola and Fazana, for those two very interesting presentations. And we now move to the next part of the session, which is a moderated discussion. And we are joined by our EXCO chair and vice chairs, and also Dieter, MPC chair. And just a reminder that you can still submit questions using the Q&A function, which we'll come to a bit later. But let's start the panel discussion, and I'll start with Vicky. And we've heard from Fazana about the work that we've been doing to consider what the new normal will mean for insurance supervisors. Can I ask what changes you expect to see, Vicky?
Yes, thank you, Jonathan, and thank you, Nicolas and Fazal, for the Fazana for the excellent presentations. So basically, again, it's commonplace to say that the pandemic has accelerated changes we were already seeing, both in the digital transformation of the insurance sector, as well as the way in which supervisors themselves deploy technology for more effective and efficient supervision. I mean, these trends were happening before the pandemic. It's just that the pandemic have supercharged them. And some people say, I don't think these are based on data, but they say they have brought them forward by a decade. For supervisors, it's the technological investments that have been accelerated, and I can see that within my own sort of local organization, but also within the IAIS and the BIS that supports the IAIS's technology. Is basically platforms to accommodate remote working. And I think these are going to pay dividends for many years to come, including, by the way, permitting more inclusive ways of working for supervisory staff and regulatory staff, which could have great benefits for increasing the pool of talent and indeed the diversity of talent that we recruit from by giving more opportunities to work remotely and from places further away from where the headquarters of the organization is. So I think also similar to the important role that big data has played in transforming the companies, the insurance companies we supervise, I believe that supervisors are now also understanding how vital it is for them to have ongoing, centralized and secure access to real-time data to ensure effective and proactive supervisory oversight in a rapidly changing environment. And I expect that more supervisors will be investing in supervisory technology tools and in basically facilitating a shift from pooling data, which is what most of us currently do, and in some ways pulling it rather inefficiently into sort of vast Excel spreadsheets that then get stored somewhere, depending on the problem that you have, to future push data collection models. So a lot of supervisors I expect are going to be improving the way that both data comes into the buildings, then how data actually gets analyzed, whether technology tools is very important, and then what is the role of supervisors in using this data, and that could create lots of efficiencies, enabling supervisors to focus on the most value-added tasks.
Excellent. Thank you. Thank you very much, Vicky. Very interesting. And David, if I can come to you next, a similar question, but perhaps also thinking through, given these changes that we heard from both Fazana about the new normal, and also Nicola in terms of some of the key trends that we're seeing in the insurance market. Given these changes that we're witnessing, do you expect to see longer-term business model changes in the insurance sector? Thanks.
Well, thanks, Jonathan. I think it's interesting to note that even before the pandemic, we were seeing the insurance landscape had been experiencing considerable shifts with the introduction of innovative products and business models, as well as a lot of new market entrants. And a lot of this included the entry of big tech or these so-called fintechs or insurtechs, or however you'd like to refer to these technology companies that are expanding their offerings to include financial products and services, including individualized insurance cover and digitalized distribution platforms. I think the pandemic, during the pandemic, we did see a significant rise in demand for these types of digitalized offerings, which provided for a lot of consumers ease and convenience, who might have otherwise been unable to access traditional insurance services during shelter-in-place restrictions. So incumbent insurers who hastened their own digitalization efforts during the pandemic have also become more efficient in delivering insurance solutions and therefore more attractive to consumers. So I think we expect to continue to see sort of an exponential rise in these business models as they shift to keep up with the demand created by changing consumer purchasing patterns and engagement preferences. Additionally, changing economic factors, including the interest rate environment and increased credit risk, are also going to have an impact on business models, particularly in the life insurance space. So we'll continue to assess these changes to understand what it means for the supervision of insurers, but certainly an exciting time.
Thanks very much, David. I think we are going to move to Suzette next. And Suzette, one of the topics that we were discussing a little earlier was around pandemic risk. And certainly this has been one of the themes coming through from our monitoring exercises and the pandemic risk protection gap. Can I ask you, what are the next steps on addressing pandemic risk, and in particular, what considerations you think there are for emerging markets and developing countries in this respect? Thanks.
Thanks, Jonathan. As mentioned earlier, the IAIS is currently focused on a stocktake of initiatives to address pandemic risk in various regions. And then, as also mentioned, the IAIS is in a unique position to draw comparisons and identify key issues for supervisors to consider. Of course, these protection gaps are accentuated in emerging markets where insurance penetration is even lower. And the impact of the pandemic on the emerging markets are further compounded by a lack of insurance coverage. Now, the I2II has also undertook valuable work in this space. And last year, the I2II and the IAIS launched a series of webinars on the COVID-19 pandemic and implications for insurance supervisors, particularly focused at the MD jurisdictions. And these webinars discussed implications of the pandemics and its mitigating measures for vulnerable segments of the population who are disproportionately more likely to be uninsured or underinsured, and the respective supervisory considerations for those. And it is clear that we will need to continue to take steps to address these issues, in particularly for the MDE jurisdictions. Thank you, Jonathan.
Thank you, Suzette. Thank you very much. Just a note, I think we're aware that it seems for participants, you can hear all our panelists, but I think you may only be able to see Vicky, actually. So we are working on the problem, but good to know that you can hear all of us. So we'll try to fix that. But in the meantime, Norio, if I can turn to you. Nicola provided us with an update on the GME process. Can I ask you what benefits you have seen from the GME process at JFSA? Thank you.
Thank you, Jonathan. That's really important, a good question. I'd like to echo what Vicky and Dieter said about importance of the reform agreed in 2019 in response to the question you just raised. The first, I'd like to highlight the important differences between GFC 2007 through 2010 and the COVID-19 crisis 2020 in terms of the impact assessment activities by the global insurance sector and IAIS. The global insurance sector and IAIS are much better equipped with supervisory toolkits to take coordinated approaches to group supervision, aiming the stability and resilience of the global insurance sector. The toolkits made it possible for the IAIS and the global insurance sector to quickly shift their mode from peacetime to challenging time, and kept pace with other international regulatory communities and financial sectors. Our experience in 2020 proved our competency and capabilities. Second, I would also like to emphasize the importance of the communication. The GME allows the IAIS to contribute to international policy debate. For instance, by providing the global insurance sector financial stability perspective to FSA, which coordinates the inputs across all financial sectors and reports to G20. The IAIS swiftly established communication with insurers, the FSB, and public, and shared our initial views with them on the impact of the COVID-19 crisis to the global insurance sector. After the COVID-19 targeted GME, just as Dieter stated earlier, we were able to make much clearer statements on the impact of the COVID-19 crisis on the global insurance sector. Lessons learned from the COVID-19 crisis are very important experience for us. Our experience this time will help us cope with possible crises that may take place in the future. Thank you. Back to you, Jonathan.
Thank you very much, Norio, and very good to hear about the value of the GME exercise and how it's a good complement to to national and regional efforts around macroprudential supervision. Good. Well, I think we'll move to the moderated audience questions now. We'll turn to the one coming through the Q&A function shortly, but we did have some questions that came through from trade associations beforehand. And in particular, I'd like to turn again to Dennis from the Geneva Association. And Dennis, I'm not sure whether we'll be able to see you, but hopefully we'll be able to hear you. And I think you had a question around data collection. Okay, I think there are some technical challenges there, but
hello,
great.
Jonathan.
There we go.
Can you hear me now?
Great.
Yes, sorry, I couldn't unmute myself.
Great.
Let me just turn on the video. So yeah, thank you very much, Jonathan, for giving me the floor again. I just wanted to refer to some of the points mentioned by the panel. So the panel referred to work underway on improving the way data from insurers comes in and the way data is analyzed. And my question builds on this. A topic of concern for a number of our members was the COVID data collection, which, as I understood it, has been rather demanding. Would you or the panel be able to elaborate on how future requests will be coordinated and whether they will be more focused? Thank you for that. Thank you.
Thank you very much, Dennis. And I'm pretty sure Dieter will be able to help us with that one.
Yes, thank you, Jonathan. Let me try to help out with that one. So let me start with looking back. Last year, as I said, we had to streamline the GME to focus purely on monitoring the impact of COVID-19 on the insurance sector. So on the one hand, we did try to provide operational relief to the participants as the COVID-19 targeted data collection was reduced in scope compared to the regular GME data collections. On the other hand, we do have to recognize that it's true that the frequency of the COVID monitoring was increased because of the need to be more closely monitoring the data and the impact of the pandemic on the global insurance industry. And here I can say, unfortunately, without data, there can be no monitoring function. However, from liaising with insurance groups, the participants, either directly through workshops or through international virtual meetings, I was glad to hear that the output of the IAIS targeted COVID-19 assessment was insightful and appreciated. So this was not only said by members, but also by participating insurers. The monitoring of the impact of COVID-19 on the global insurance sector also enabled IAIS, and I think that's very important to stress, to report on the operational and financial resilience, as well as on the potential vulnerabilities of the global insurance sector towards FSB and the G20, which again contributed a lot to the credibility of the global monitoring exercise and the holistic framework in general. So going forward, the IAIS has decided to suspend the COVID-19 data collections, as most of you will know, with the possibility to restart, for instance, in case significant financial market downturns would turn up again. For this purpose, we will, at the level of IAIS, closely monitor the situation on the financial markets via our IAIS risk dashboard, and we will, of course, if needed, coordinate future data requests related to COVID-19 with our members. Of course, let us hope that new data requests in this field will not be necessary. Additionally, and I think that's important to answer your question fully, Dennis, I can mention that lessons learned from last year's COVID-19 data collection and this year's regular GME will feed directly into the further improvement of future IAIS data collections. This includes, on our side, considerations on how to best focus data requests, how to conduct or integrate ad hoc data collections with our yearly GME process, and also a check from our side to see whether there is room to reduce market fragmentation and supervisory reporting on key indicators. So we do have some sympathy that whenever we ask data, we know that is a burden, and we will try to do our best to minimize that burden to the maximum extent possible. Jonathan,
thank you, Dieter.
I think we can take on the next question.
Great. Thank you very much, Dieter, and thank you, Dennis. Good. Well, we are going to move to some other questions. We have a little bit of time left. There is one that came through beforehand as well, which talks about fintech implications of conduct, culture, and governance work. So I think this is definitely one of the new trends that's on our radar, and I'll be happy to talk a little bit to that theme. So the stakeholder who put through this question referenced in particular a roadmap project which references a member-only report on regulatory and supervisory responses to fintech developments, as well as an overview of market developments and implications for the future development of global insurance markets. So yes, absolutely, this is one of our projects we're busy with at the moment, and one of the objectives of the survey that we're going to be doing of members is and its conversion of the findings into a members-only report is to help identify and prioritize key areas of focus for the IAIS as we plan our future work on fintech and digital transformation. Because this certainly is one of the challenges. Fintech is so broad and far-reaching that it certainly does call for some prioritizing and focusing. So that's what we will hope to get through this exercise, and this will feed into our future IAIS strategy and roadmap discussions, which we will certainly share with stakeholders. Already our preliminary thinking on fintech implications for conduct can be found in some of our previously published material, like the issues paper on increasing digitalization in insurance and its potential impact on consumer outcomes, which we published in 2018, and the issues paper on the use of big data analytics in insurance, which we published in 2020. There's also some other projects reflected in our roadmap that are envisaged to cover broader implications of fintech for issues such as conduct, culture, and governance. So, for example, the Market Conduct Working Group is currently working on a project related to the use of key indicators and data gathering techniques for supervising conduct. So a very interesting project. And this may well look in particular at developments of guidance to address potential inconsistencies and or gaps in conduct frameworks in responding to the impact of increasing digitalization and fintech on consumers. So I look forward to that work, and this is where it gets very real around supervisory practices, particularly conduct supervisory practices, and whether the fintech trends will require some tweaking or some enhancements there. And then lastly, to mention that the work being done by our FinTech Forum will also specifically look at governance, accountability, and consumer implications relating to the use of various fintech applications for core insurance functions like product design, underwriting, pricing, and claims, and so forth. And the outcome of this work is also envisaged to be shared publicly in the form of short information notes or articles in the future. good. I hope that helped. Now, let me look what we have in terms of questions from the Q&A function. I think there is one question we can deal with quite quickly as it relates to stakeholder engagement and communication. And thank you, Katz, for the comment. So happy to hear that in-person meetings will be coming back next year, but on the other hand, the virtual meetings are quite helpful from an efficiency point of view. Do you consider to continue these online communications post-COVID-19? And again, I can maybe respond quickly on that because this is an issue that we've also discussed as part of our small group discussions this week around our internal governance, and to report that where we are, and maybe Vicky would like to expand on this, is certainly we are looking to adapt our own IAIS operations to the new normal. And that's in recognition of two things. One is, Katz, as you have said, it's really about the efficiency issues and the benefits of being able to have focused and possibly more frequent meetings without extensive travel involved. And secondly, very importantly, is also environmental considerations. And I think you'll recall that we agreed an environmental policy for the IAIS at the end of last year, which commits us to also reduce our travel for meetings around the world as well. So this has resulted in a commitment under the post-pandemic environment to probably move to a more balanced approach between virtual meetings and in-person meetings going forward, but also recognizing the importance of the social capital that one's able to build and maintain through having in-person meetings as well. But let me see if Vicky, if you'd like to add anything to that.
No, nothing to add really, Jonathan. You've covered all the angles. I mean, it is quite obvious that this issue of social capital is an important consideration in the minds of our members. We undertook a survey to try to gauge appetite for in-person meetings for the rest of 2021. And Jonathan has already spoken about the decision we had to take, unfortunately, on the AGM and the annual conference to do it virtually, given uncertainties in the planning horizon. But we did note that particularly for the later times of year, when I think people were hoping that the vaccination programs would have been accelerated in more jurisdictions, there was a lot of appetite to meet in person. So it's safe to conclude that we're not going to be all virtual in the new norm. But on the other hand, a number of members have also emphasized the inclusivity of being able to attend virtual events and not to have to incur the travel costs. So I suspect a balance, as Jonathan said, between the two in the new norm. We've the small group that Jonathan of ExCo members that Jonathan referred to, that is led by Mike Considine, is doing further work on what precisely that new norm would look like in phase 2 of this work, but that is very much the expectation. And the final point is to reinforce what Jonathan said about our own environmental policy. I mean, generally, it's a good idea in life in general to act as in the same way as you preach. And we are all very kind of committed to do our bit with our role as insurance supervisors with policyholder protection in our minds to ensure that our sector is safe against climate risks. Of course, carbon emissions are a big part of what's happening in terms of the change in the climate. So actually having a policy that says we're going to reduce our own carbon footprint is something that I think is imperative for us to do as a global standard setting institution that with an interest in the environment. Let me stop here.
Thank you very much, Vicky. I'm now going to turn to one of the questions coming through the Q&A, which is we've touched on before, but let me see if anyone from the panel, and I'm going to have this as an open question for any of the panelists to respond to, which is around getting the appropriate balance around operational resilience and cyber concerns. How will the IAIS ensure that risks are appropriately balanced? On the one hand, in terms of the benefits from digitalization, including third-party outsourcing, and on the other hand, some of the operational resilience and cyber concerns. Feel free to jump in. And David, I don't know whether you particularly would like to add a perspective, because I know this is a topic that the NEIC has been doing a lot of work on as well.
Yeah, Jonathan, I think we have. And just to be brief and somewhat high level, I think this is one of those regulatory questions that does require some balance there. I think we're going to have some expectations that firms are really giving some strong consideration to their operational resiliency, their risk to cyber attacks. We've seen an uptick in those over the past couple of years or so. And so I think we're going to have fairly high expectations for firms' abilities to identify those risks within their organizations and be able to adequately ensure that they have plans in place for those things as they arise. But obviously, as with any regulatory question, that's going to come with the need to balance that against the realities that firms are operating in. And I think as our work progresses in this space, we'll continue to have an open dialogue and engage with our stakeholders and land in a good place here.
Thank you, David. Would anyone like to add to that? Anyone else from the panel? If not, I have another question lined up for Dieter, which is on the, I guess, GME related, in that we got a very good short presentation from Nicola, but perhaps we had a question here about from an IAIS perspective, what are some of the most important global market trends and developments that we're looking at, and how is the IAIS coordinating this assessment of trends and developments with other standard setters, including the FSB. So I know Nicola touched on these points in his presentation, but feel free to expand.
Okay, I'll do my best. Thank you, Jonathan. Well, let's be honest. That most immediately, of course, our most significant focus has been on COVID over the last 18 months, I dare to say, and we have worked very closely with the FSB and other standard setters to try to assess the risks to the financial sector and to support our members in their response to the crisis. As said before, we were able to quickly adapt our global monitoring exercise, and we used it to assess the potential vulnerabilities arising from the impact of COVID-19, which first of all showed the flexibility of the holistic framework. As I said before, we were very happy that we were able to pivot so quickly. And the assessment that we performed provided IAIS and insurers supervisors and actually the broader regulatory community with significant information to understand the risks to which insurers were exposed. More in particular, and as you said, Jonathan, it was already highlighted by Nicola, the COVID monitoring has helped us to highlight the importance of the follow-up of certain risks for which we already knew they were worth monitoring. I've mentioned before the low yield environment. It was already on our radar. It's now even more pronounced on our radar, I would say. But the COVID monitoring has also sharpened the follow-up of some other trends and risks, such as the increased digitalization, which was just mentioned in the previous question, and the possible related cyber risks, and the increasing credit risks, in particular in light of the certain COVID government support measures being withdrawn. Now, looking at the longer term, and we've mentioned it a few times already today, climate change is, of course, one of the biggest risks to which insurers are exposed. And our experience with COVID tells us that this is important to address this risk as well, and that we try to get a supervisory response to the challenges that are posed by this risk. And hopefully we can create a coordinated global response. So in terms of, in short summary, there are different risk themes that we will further scrutinize in the course of this year. Low yield environment, credit risk, and cyber risk will definitely be on the top of our agenda. I hope this was helpful, Jonathan.
That's great. Thank you very much, Dieter. Well, I think we should be wrapping up our panel now, but maybe we'll give maybe everyone one final word. And the theme of this session was really about the new normal and insurance supervision in the new normal. Maybe you have one or two sentences you can share about what you view as you know, what's going to be key in this new normal as leaders in the insurance supervisory world, and how the IAIS may be able to help with those issues. It's certainly an exciting time that we're heading into, as many said in their remarks. Many fast-pacing developments. And we as a community of insurance supervisors are going to have to prepare ourselves for that, for the many changes, but also a very exciting time to be in insurance supervision and in the insurance sector. So I will hand over to the panel. No particular order, so feel free to jump in, although I don't know, Vicky, if you want to maybe kick off.
Yeah, wow, this is an important question, Jonathan. I mean, for me, I think that the new areas where we have to urgently come together, and we are coming together to develop best practice, and where appropriately, and there will be, and it would be appropriate in certain circumstances, new standards, new supervisory material, is in the area of climate, for the reasons that we have discussed. There's now a common understanding about the climate emergency, and within that, the physical and transition risk, particularly under scenarios where policy does not respond in all jurisdictions in a way that gets you to net zero smoothly. And this is an area where there are lots to do. There are lots to do on the monitoring side. There's lots to do on the supervisory side. There are lots to do on the standard side, including on disclosure. The second area is the nexus of operational resilience, within which I include cyber resilience and outsourcing to critical third parties. I mean, our firms, our companies are outsourcing to third parties, a lot of which of these third parties are becoming critical themselves because despite the fact they're not financial services firms, they actually provide services to financial services firms and to insurance companies that if they got disrupted would create disruption to many of them. And there isn't sort of a common international way to try to understand how we deal with this issue. There are lots of opportunities from outsourcing to critical third parties, which will be passed on to policyholders, including security opportunities, because some of them are highly security resilient and cyber resilient, but there are also risks. So dealing with that kind of new area is very important. The third area is, don't forget, however, financial resilience and the lessons that we learned from the global financial crisis. And we do need to finish off and conclude our program on that. Thanks.
Great. Thanks, Vicky. And we're running a little short of time, so we'll get the one sentence from our vice chairs and from Dieter. Should we say ladies first, Suzette?
Thanks, Jonathan. From an EMD perspective, the work on the risk-based solvency and supervision regime is very critical and important, and we're looking forward to that 2-year project, as well as our capacity building support and knowledge sharing initiatives that we've got in place and have been put in place. So in interest of time, I'll stop here. Thanks, Jonathan.
Great. Thanks, Suzette. Norio?
Thank you, Jonathan. I echo pretty much everything has been said by Vicky and Suzette, and I'll be very brief. I think for the time of the change, something we should never forget is the read back to basic. We are here for the policyholders' protection and also maintaining financial stability. That is really what we've been working for, and all the mechanism toolkits we've been developing is really for the purpose. So that's really where we should start thinking, and we should come back and as a conclusion. And then what is that? I think that is really important, especially time of the change. Thank you.
Thank you, Norio. And David?
Yeah, thanks. And also generally agree with everything that's been said. I would echo Vicky's comments with respect to climate risk and resiliency. In the state of Florida, we're obviously very prone to catastrophic events that are becoming more intense and more frequent. And so keeping a close eye on our regulatory framework with respect to that issue, I think is going to be very important. And then as we move into, as you've called it, the new normal, I think it'll be incumbent upon the regulatory community to ensure that we're demonstrating to stakeholders as well as to broader authorities like the FSB that as some very broad topics come to the table, such as diversity and inclusion and climate and many others, that we're demonstrating that we have the regulation of the insurance market well in hand. And so I think those will be some of the things that we need to be focused on.
Great. Thank you, David. And Dieter, to wrap it up.
Yes, so I would say from an MPC perspective, COVID or not, I think implementing the holistic framework in its full size and its full capacities is a key pillar of the post-crisis reforms of IAIS, and we should try to finalize this. And this, for me, holds three key things: collecting the right data on the risks we really want to follow while trying to minimize the burden that is, analyzing it appropriately, and setting up a supervisory response if necessary. And I think that is going to be the challenges coming up for the next few years. Thank you, Jonathan.
Great. Thank you, Dieter, and thanks to all the panelists for those really great insights and, if you like, a leadership view on where the IAIS is heading. So that's all we have time for today. And thank you very much again. But before we end, Vicky mentioned it already. We do have one special goodbye. And I'm very sad that we are not able to show you on the screen Connor Donaldson, whose smiling face has been a frequent feature of many global seminars and annual conferences in the past. He's served as an excellent MC on many occasions. And it's strange to think that he won't be here for the next one unless we hire him as a private deal. But Connor, all the very best for you in your future. It's certainly with sadness that we will say goodbye next month, and but also with great pride, because I know you are going on to great things within the insurance supervisory community in the Asian region, but on the global stage as well. So very warm congratulations. Also with pride, because I think it's a product of an IAIS career development path as well. And it's been my absolute pleasure to work with you over 9 years. First as a chair of the implementation committee, and then as Secretary General, and you have been a real rock and such support to me. So a huge thank you. You've been a real pillar of the implementation work of the IAIS and really have moved it forward. But also as part of the management team, you've been a real glue within the Secretariat and a mentor. And a friendly face to so many, and such a part of the team spirit here. So we're going to really miss you, but it's a great testament when you leave an organization a lot stronger than when you found it, and you've made a huge contribution. So a very big thank you from our side, and not goodbye, but until we see you again. So thank you, everyone. Thank you for all of you who joined us today. I appreciate it. For many, it meant either a very early start or a very late end. But we really appreciate the ability to have this dialogue despite the limitations of COVID-19. But we look forward to better things next year with our global seminar in Dubrovnik, and will be somewhat of a reunion, I think. In the meantime, everybody, please keep well. We'll be making a recording of this dialogue available on our website and LinkedIn, and we'll also send you a survey to ask for feedback on today's event. Stay safe, keep well, and goodbye. Thank you.